Show me the money. This is the Moneyweb Be a Better Investor podcast, picking the brains of professional investors on their investment strategies, successes, and mistakes. Your host, Richo Venter.
Welcome to this week's edition of the Be a Better Investor podcast. My name is Richo Venter, and in this podcast series, I speak to leading professional investors and business leaders about their investment journeys. And we look at their first investments and how their investment strategies have changed over the years. And we also look at their personal portfolios to see whether they practice what they preach. And the idea is to identify those golden nuggets of wisdom to help amateur retail investors to become better investors. My guest today is Richo Venter. He is the head of portfolio management at Inn8 Invest. Richo, thank you so much for your time today. Just give us a bit of background. Where did you grow up and what were your dreams when you were still at school?
Hi, Rick, and it's great to be here today. I think when I grew up, there were quite a few things I wanted to do. I think a pilot was one I was thinking of at some point. Watched a lot of law type of programs on TV. Then I thought a lawyer sounded like a great career. And my first day at university, I actually signed up for law. A day or two later, I realized that was not...
It's not the same as LA law.
No, not at all. And really then started thinking more and more about finance and really enjoying just a world of numbers. I think I've always been a numbers guy, and that's what I've enjoyed actually from being very young.
And you're a Joburg boy?
No, I come from Pretoria, so grew up in Pretoria. Spent my high school years in a smaller town called Middelburg in Mpumalanga, and then came back to Pretoria to attend university at the University of Pretoria. Yeah.
So you studied finance, accounting, I would imagine. And when did you first meet or were exposed to investments?
Yes. So my dad, he's a financial advisor, so always exposed to the finance field. But started university in the year 2000. Like I said, joined Law Day 1. Then ran into a professor that told me about this great course he's presenting called BCom Investment Management. It was a fairly new course. He did an excellent sales job of the course, and a day or two later, I was signed up to his course. Spent a few years there, did the degree, then went on to do honours. I think at that point it was honours in financial management. There was no honours in investment management, and really enjoyed the course. It was a broad course covering finance, but really moving beyond the accounting part. That was fun.
So a short discussion with a professor just set up your whole career.
Exactly.
Now, it's always interesting how people get into certain careers because sometimes it's not as planned as many people think. Now, let's talk about investment. What was the very first investment you've ever made with money you earned yourself?
Yeah, so I was quite brave early on. After doing my honours, I had to get a job. Very few job opportunities out there. So there wasn't really extra money. After petrol and paying your car, you barely had something left at the end of the month. But luckily the banks were very lenient back then. This is now over 20 years ago. And it sounded quite nice to get a big loan from a bank, buy a piece of land and buy a house. And that's really something that's been of big interest for me outside of this asset management industries, just from a young age, investing in property. I know it's not been great the last 10 years, but 20 years ago, property markets grew quite quickly, easy to get finance. You could leverage quite nicely, and that was my introduction, I think, into investing.
So you bought a property early on in your career?
Actually built a house. Piece of land, build a house. Had no idea what the process entailed, but it turned out okay.
And maybe other investments, stocks, unit trusts, maybe other asset classes?
Yeah, so early on in my career, I didn't really pick stocks. I always felt I didn't know enough about it. I wanted to really understand a stock before you invest into it. And it was very strange for me how a lot of my friends said, you heard this guy said this, or that family friend said, buy this stock. Oil price is about to rally, so getting to Sasol, I always found it strange. So I quite liked early on to invest in assets that seem tangible, where you can buy a house, you build it, you can calculate your profit at the end, those type of things. What I did do as well, as I said, I was quite brave early on, maybe didn't know much better, invested in a restaurant quite early on in my career. It was a restaurant in Cape Town, a steakhouse. Big mistake.
Which one?
It was the cattle baron back then. Big mistake, big lesson as well. Luckily, it wasn't a huge amount, but you can't be too distant from an investment you make. That was one of the big learnings from me at that point in time. So those were all early 20s type of investments on credit.
Well, it worked, but the property rally ended quite abruptly in 2009, 2010, after the Freddie Mac and Fannie Mae collapsed in the US, and we entered the international financial crisis. So did you get out of the property market before that happened?
No, it was actually a great opportunity then to buy land up. A lot of the estates back then, especially the area where I stay, you could buy pieces of land for extremely cheap back then. So I tried the recipe again back then. Luckily, it worked out quite well and still own a lot of the properties. If one can now look back in time, selling 6-7 years ago would have probably been the best point in time to sell property. But I think once you've got fair financing, good tenants, and you know how the recipe works, it can still be a reasonable investment.
It sounds easy and the business model is pretty straightforward, but it's more risky than many people think. And it is not always as profitable as people think it should be. And the reason is, and that's my experience, is most people pay too much when they buy the property, because you make your profit when you buy and not when you sell.
Exactly. Yep, exactly. And a lot of people obviously burn their fingers. There's a lot of expenses, a lot of maintenance one need to keep track of.
Would you advise somebody 23, 24 in this current market to start to work and earn a salary to get into property as quickly as they can?
It's much more difficult to answer now, but I would say yes. You asked earlier, what about unit trust investments? And I've obviously from a young age invested in my pension. But I think it's quite nice to own a home from a young age and try and pay it off. It does give you a lot of financial freedom later in your life to do equity investments and invest in other type of higher yielding investments. And I probably only started, apart from the typical unit trust, only started investing in stocks probably late 20s or early 30s. Just didn't have the extra cash to buy any of those instruments.
Now, currently, how does your portfolio look?
I follow a very different strategy, as I obviously work at a DFM or multi-management type of business. So the insights I've got...
I just want to interrupt you. Multi-managers, they don't analyze investments, underlying investments. You look at fund managers and funds, and then you invest in those funds, and there's a significant difference.
Yes, that's exactly it. So we look at funds and themes as well as asset allocation. So we don't have to necessarily buy a typical balanced fund. You can buy very specific themes. You can buy a tech fund or investments, as an example, buying Africa, Euro or US dollar type of bonds. You've still got a lot of flexibility to explore your view and try and get access to the type of instruments you like. So not picking stocks, but that's how I typically invest. Find a specific theme I like or theme I've researched and then invest in it through funds, or it can be exchange traded funds or CIS, collective investment schemes as well.
So currently you do focus on investing in funds. Just tell us exactly what funds you have or you hold and why you picked them.
Yeah, so we manage quite a few products, from income funds all the way to high equity multi-asset balance funds. We've got offshore products that we manage. So there's a wide array of funds we use. If you look across our funds, you'll find the usual suspects like Coronation, 91, M&G, some of those bigger brand names and different weights depending on the objective. We quite like boutiques. Quite a few boutiques we use, the likes of Truffle. I'm sure you've had them on the show. Batelier 361.
But in your personal capacity?
My personal capacity, I actually buy the fund I manage. I've got all those great names in there. And to top that up, I buy some tech funds. I really buy into the tech and this massive opportunity we've got in tech and AI. So I quite like the type of stocks, exchange-traded funds that I would hold. That's your semiconductor, NASDAQ 100, those are the type of...
They've performed really well. This Magnificent 7, NVIDIA, those you had a big exposure because they've really performed really well over the last few years. If you could go back to your 21-year-old self, what advice would you give yourself?
I think after finishing my honours, I jumped into the first job I could find. And I think in hindsight, one, probably have to think a little bit more about your career quite early on and not just take any job just to get a salary. So I would think get into the type of company you want to get in, even if they pay you very, very little. At that point in your career, it makes no difference what your salary is, and rather get into the type of company you want to work in. You're not going to get into the role you want to on day one. It takes you years to build networks and work into the role you want to.
So invest in your career.
I think so.
I want to go back to your cattle baron adventure. How important is it to make a mistake? And what should your attitude be afterwards? Or how should you learn from it?
Yeah, so I think it's important to make mistakes. I think it's important to make it in small scale. So when you invest early on and you have to try various different things. And I've tried a lot of different things over the years, a lot of them just for my self-learning. We try a little bit of crypto mining here just to understand how that process works and what you do with graphics cards. And I often see it as a learning process. You put a little money in something you think could work out. Make sure it doesn't distract you from your own job, because I think that's very important. That's still your main career. But I think these supplemental experiences is important to learn, make you see things from a different angle and help you in your day-to-day investments as well.
Now, you studied investment management, and of course you study exactly what to invest in. But there are not many courses which tell you what to stay away from. And I think when you make a mistake, it's a very, very steep learning curve. And it can be one of the biggest educational moments of your life. I've been through that. And I think the key is don't put all your eggs in one basket. If you take a hit somewhere, it shouldn't be the end of the world.
Exactly. And that's why part of that, almost further study. So doing a few things. I did the CFA after university as well. I think there you learn a lot about risk management and understanding a lot of those concepts. So I would also highly recommend that for any individual looking at a career in investments.
Yeah, I think education is critical because it's difficult to be a successful investor. You know, even your most experienced professional investors, they get 6, 7 out of 10 correct. They only pick 6 or 7 winners, and then you have also 3 losers in the portfolio. And the idea is hopefully that the losers don't perform as badly and that the winners really shoot the lights out. And that shows you it's difficult for somebody young to enter the market or the investment world, you know, without really in-depth education and training in the field. It's going to be very difficult.
Exactly. It's about small margins. To your point that 6 out of 10 sounds like a fair ratio, and that's the really good investors. But by accumulating those small margins, that's how you become successful and build up a good track record and a good return for yourself.
Let's get to the 2 questions most people wait for in this podcast. What has been the best investment you think you have ever made?
Personally, it was, I think, tech over the last 3-4 years. I was in there quite early for my personal portfolio, and even in our own funds we manage, we've been pushing that theme. Would have loved to have pushed it even more in hindsight, but that was the best one. In terms of managing funds, I think after the crash from COVID-19 in 2020, it was very difficult to think where the world is going, and we actually took a fairly optimistic approach in the portfolios and in the funds I manage as well. And that was probably one of the best decisions made.
And we've spoken about your investment in the cattle baron. Has there been another bad investment, or do you regard that one as your worst one ever?
Yeah, that was the worst one ever. I think if you think at stock picks, every investor has got one that lose a lot of value. A specific stock I can think of that I've invested in, luckily a small amount as well, as Beyond Meat a few years ago. It just sounded like such a great theme. It's a plant-based food, and that share unfortunately just lost so much value. That would be the 2 worst investments I can think of. That was on my personal account.
Just lastly, how do you stay informed about the investment world? What do you read?
The great benefit of a DFM or multi-manager is we've got hundreds and hundreds of some of the top local and global asset managers that pass through our doors. So I can listen to all their views, the thinking, see how it plays out in hindsight. And that's just excellence, gaining from these best minds locally and globally. We get a lot of insights from these managers in terms of reading, a lot of the sell-side brokerage reading, and then just staying on top of things like the popular type of finance news, just staying on top of it all the time. I think there's just so much information out there. The most important thing is to find those information sources that relates to you and just filter through the noise.
Yeah, but that's a skill, to distill the most important signals from the information that is available and just to discard the noise, because if you can do that, you're halfway there.
And I've got a few go-to guys and ladies as well that I would go to if I really want to find out something. And I can mention a few, there are more, but Saul Truffle, I would phone him up. The guys from ABAX, Philip Liebenberg, especially when there's something around bonds, I can phone him up. And that's just so great that you've got these great minds. And some of the top international guys as well. They're very happy to entertain my questions and queries with them.
Yeah, it's a matter of access to those people, and that is really, really a big asset. But Richo, thank you so much for joining us today and for sharing your insights.
Yeah, right. I really appreciate your time. Thank you.
That was Richo Venter. He is Head of Portfolio Management at Inn8 Invest.
Show me the money. That was the Moneyweb Be a Better Investor podcast with Richo Venter. Thanks for listening. Catch up and listen to all the Moneyweb podcasts on moneyweb.co.za or the app. Moneyweb, your trusted source for business and investment insights.